Hi, I'm Connor Humble, mortgage manager of Allsopp and Allsopp Mortgage Services.
Because interest rates are probably the highest they've been in some years. Does lower interest rates mean a cheaper mortgage?
Yeah, I mean, in some sense, but at the same time, I think a lot of it actually just boils down to, well, if you get 7 credit cards a month after you take this mortgage and you max those out, can you afford this mortgage still?
Yeah.
And we bust some of the mortgage myths that get brought to us on a daily basis.
If I buy a house on a mortgage, can I resell it immediately and get more money?
Stuart would kill me if I said anything else.
Has the recent floods in Dubai reduced the demand from first-time buyers in the areas most affected?
It's going to be a great one, so be sure not to miss it.
Taking care of business, we've got a special edition. We're actually talking about mortgages this week. Mortgages have been all a part of the news for the last couple of years. We've seen loads of interest rate rises, as much as double figures in the last 2 years. So today, I am joined by one of our mortgage experts at Allsopp and Allsopp Mortgage Services, the one and only Connor Humble, who is actually our mortgage services manager. So I think it's your first time on the pod.
Yeah,
Or certainly been on videos before. So welcome, mate.
Thanks. Hopefully not the last.
Definitely not the last. Definitely not. Mortgages, hot topic. Obviously, money is near and dear to many people's hearts and play a big part in, helping people get their first homes, particularly here in Dubai. So, got loads of questions to ask you today. There's been a lot of changes, and we're expecting more over the course of this year. But before we get started, tell us a little bit about yourself. How long have you been doing mortgages?
Yep.
How long have you been in Dubai? How many people have you helped get a home in Dubai?
Yeah. So I've been in mortgages now for 6.5, 7 years.
Yeah.
Spent 5.5, 6 years of those in central London. So that market was probably just as bustling at the time as it is here now in Dubai. Been in Dubai for 1 year. It's been a big learning curve. There's a lot that I can bring over from London that has helped in the UK market in Dubai, but certainly been a steep learning curve because some of the ways the banks work is very different and the way that we work out affordability is so different. So what I thought was going to be far more transferable skills, it wasn't in some ways, but at the same time, it was very quick and very easy to learn with the banks because they're probably more accessible here than they are in the UK as far as speaking to the decision makers.
Let's start with that then, because obviously you've made a big impression on the business in the last 12 months since you've been here. And I actually do believe some of the things you've done in the UK, some do apply here, but some of there are also some differences. What are the big differences with the banks in the UK right now, or certainly when you were there, and what you found in the last 12 months in Dubai about how banks actually operate and how easy it is to get lending?
Yeah, so I think in the UK, criteria is a massive drive. So you've got hundreds of banks and you'll have completely varying criteria across all those banks. So sometimes you might have a pool of 100 banks, but only 5 of them will meet the criteria of a certain client. Yeah. In Dubai, there's fewer banks, but the criteria is more widespread. So it tends to be that a lot of the banks will consider a very similar client to the other. So then it really does boil down to the interest rate and the figures and the facts of it, as opposed to there's 100 banks, there's 5 options. Of those 5, this is the rate that's going to be the best one. Here, it's really sort of delving into processing fees, the cost of things with the banks as far as surveys, and the interest rate, because ultimately, most clients that we speak to could go to any of the banks because the criteria is quite rigid here and everybody is in a very similar ballpark. The only difference here really is self-employed. Self-employed, there's far more to consider. And then there are fewer banks that consider it. And then the rates wildly vary for self-employed. But if you're salaried in Dubai, if you're on probation, obviously that's one part you got to think about. New to country, but there's usually multiple banks that will do that. Whereas, say, in the UK, it was very sort of, you was pigeonholed quite quickly into very few banks if you varied outside the standard criteria. So
it's roughly, 20, 25 banks that we actively deal with every month or actually in Dubai. Is it safe to say that aside from the upfront costs, such as your surveys and stuff, products are not hugely, they don't differ massively, do they? There's not lots of creativity like what you would see in the UK where there's different things you can do with different banks. Yeah, I think one of the big things here is that there's no sort of price bracket for interest rates for down payment size. Yeah. So in the UK, 15% deposit, 20% deposit, 25% deposit. At most 5% increments up to 25%, and then there is a bigger jump up to 40% down payment.
you would get different offerings across those banks. So Santander will offer you a different interest rate at 15% deposit to 20% to 25%. Here, it's just the same across the board. Yeah. You could put 20% down payment in, which is the minimum in the UAE as a resident. Yeah. Unless you're Emirati, then you get a 15% down payment option. But if you then put 25% down payment, 30% down payment, it makes no difference. You get the same interest rate. So then it's working out, is it worth leveraging? Cash is king, keeping some cash back. And then that boils down to the property you buy. If you buy a property that needs a lot of work, you might want to keep cash flow, therefore borrow the full 80% that you can, load in some of the fees, which you can do in Dubai, which again is a massive benefit that you can't do in the UK. Because I guess the equivalent of the DLD fee in the UK, the Dubai Land Department fee,
stamp duty,
is stamp duty. Yeah. And there's no way of financing that in the UK.
Yeah.
Whereas here, you can finance a certain percentage of that into the finance mortgage.
Let's talk about deposit, because for anyone that's watching the podcast that perhaps doesn't know a lot about Dubai, the barrier to entry to actually buying a property in Dubai is probably significantly higher than it would be in the UK. Remind me, UK is 5% deposit in some scenarios?
Yeah, 5% down payment in some scenarios, which is obviously easier. Whereas Dubai, we're looking minimum of 20% plus maybe another 6%, which include all of your fees. Yeah, we say sort of 6 or 7% would include all the fees, including the bank's fees and the valuation fees. So when it comes to, like you say, the actual entry level access for purchasing in Dubai, you've got a larger cash injection you'd need than the UK.
Yeah.
But at the same time, it's as far as the opportunity of loading in those fees is a massive benefit. Yeah. And there are, whilst you can do a 5% down payment in the UK, there's far more T's and C's to that than would meet the eye. There's certain properties and there's price brackets, which those price brackets, you wouldn't be able to buy much in the UAE for the price bracket.
So for context, 26%, if you're buying it $1 million dirhams, we're talking 260,000 dirhams you would be required to essentially be able to buy a property in Dubai with a mortgage. Working that back into sterling, you are talking approximately £200,000 that price bracket, and you would need around 50-ish thousand pounds. Is that right? My maths there? Yeah, it is. Yeah, about £50,000 just to include your fees and your deposit and your down payment. So barrier to entry is quite a lot higher. Why do you think banks insist on that? I know it's government, it's led at central bank, and I know the answer because I've been here a long, long time. Why do you think, out of interest, do you think banks insist, or the central bank insists, larger commitment to the purchase?
I would say from experience, and I could be wildly wrong as you say, is I guess the commitment level from people in the UAE. Yeah. People are very quick to come to the UAE. They may be here for a couple of years, then they move to Singapore, and then they're there for a couple of years, and they move to various countries. I think a lot of people that make the move into foreign countries from their homeland have a tendency or job roles where they could then venture further into other countries. And potentially that's why the banks want a larger buy-in from the client.
Absolutely. It was actually a measure brought in about nearly 10 years ago to, I guess, cool the market, but also de-risk the banks to ensure that there's enough risk in it from the buyer's perspective. So what are you finding happy at the minute? Because 53% of our transactions in this quarter this year, which some of you might be interested in, is that 53% of all of our transactions were actually with finance.
Yeah.
Anyone who perhaps is not in our business may be surprised by them because interest rates are probably the highest they've been in some years. 2 questions. One, do you think money's expensive today? And the second question is that 53%, is that on the high side? Do you think what are you seeing? Are you seeing people veering towards buying cash, or are you seeing people still interested in taking mortgages?
Yeah, so I think veering back to what we said earlier, with cash being king, I think is borrowing expensive at the moment compared to what some people had experienced previously? You could say yes. If you're looking at people that maybe bought 3-4 years ago, had interest rates of 3%, 2.8%, whatever it was back then, those clients are now looking and thinking that it's expensive. But if you compare that to other countries, I know I keep going back to the UK, but it's obviously a good sort of comparison point for us and for me personally being there. The interest rates there are the same. So if not a little bit higher. Yeah. So actually getting borrowing, keeping cash back, I am seeing more and more people now that are open to having that discussion, even as a cash buyer with the option of buying cash. Mm-hmm. Just having that educational chat to understand what you can leverage from the bank. And we mentioned the product earlier. with certain banks, and one of the big banks here, you can have essentially what is called a home-in-one product. So with the home-in-one product, it's a little bit like an offset mortgage in the UK. So the bank will open a savings account. That savings account you can fund with your own savings, your own cash. You won't receive any interest on that savings account, but what it does do is offset the interest on your mortgage. For people that are cash buyers, it's a great product option, because what they can do is, looking at the project, what are they going to need? Go ahead and, okay, we were going to buy this cash. Well, look, why don't you finance 50% of it? Put the cash that you had originally there into the savings account, which will offset the interest. That's still liquid cash. You can dip into that as and when you need to. And if in the end you decide, actually, I don't need the finance at all, you could take that cash and overpay the mortgage and clear it in full. And one of the big things here in comparison to the UK is the early settlement charges. So the central bank have set a very palatable early settlement charge that the banks have to adhere by, which is a maximum of 1% of the remaining loan amount up to the maximum of 10,000 dirhams. So if you've got a 5 million dirham mortgage and 2 months in, you decide, actually, I'm going to clear this mortgage in full, it will cost you 10,000 dirhams plus VAT, so 10,500 dirhams. And it would be a discharge fee of around 1,800 dirhams. So you're looking at really a full cash injection there of 13,000, 14,000 dirhams to clear that mortgage.
So about £3,000.
Yeah.
How would that compare? 500,000, so let's call it £1 million in the UK. How much would that potentially cost me?
Yeah, so
to pay early.
One of the higher sort of costs, you're probably looking at 5%. It's, people tend to keep debt for that reason.
Yeah.
And they wait until the fixed period ends. It tends to be on a retracting scale. So first year it'll be the highest charge.
Yeah.
And as the bank starts to get more interest, they'll charge less. But here, that sort of liquidity option of moving bank, because you also have to pay it if you change bank. So if you take the mortgage with one bank and 6 months in, suddenly there's a much cheaper option available.
So there's less incentive to move in the UK than there is here.
Far less, whereas here there's that fluidity.
Okay, so today I'm a tenant. Okay, I'm not a tenant, but in this scenario I'm a tenant. Okay, rents are probably pretty high.
Yeah,
got a challenge of paying high rent or potentially jumping into the property market and paying higher interest rates. What are you finding at the minute from many of your clients you're dealing with at the minute in terms of people's choices? It's kind of two difficult choices. You pay a high rent or you pay higher interest rates. What are you finding? What's your typical advice?
So, to be honest with you, a lot of the people we're speaking to that are renting at the moment, that are looking to buy, the interest rate isn't something they're even too concerned about, to be honest. Because if you imagine as someone getting a mortgage, even if the mortgage payment matches your rent, it's your mortgage that you're clearing. Mm-hmm. Whereas in the eyes of the tenant, they're thinking, well, I'm clearing somebody else's mortgage, or paying this money will just go into somebody else's account. One of the big things is, like we've said previously, and we just mentioned, is the 20% down payment. It's paying that higher rent whilst also saving for that down payment.
Yeah.
And it's far more, I wouldn't say easy, but it's something that is more common here, and you've got the options to do because of the way that Dubai is at the moment with the potential of earnings. People have far more opportunities to save that extra money. But I would say that's the conversation we're having at the moment with people is, when it comes to buying a property, they're asking us what's the easiest way and the quickest way of saving that cash and how much do we need? And they're the conversations we're having. The interest rate, to be honest, isn't something that many tenants are concerned or push back on us.
So you're having a lot of conversations and really early on in people's search before they maybe got the savings, or really basically get an idea of what they actually need to get on the ladder to begin
100%. Because the more people that arrive to Dubai, a lot of people are coming from various countries, may own already.
Yeah.
So instinctively, they want to own a property. They don't like the idea of renting. Yeah. So when people are arriving in Dubai and they're new to country, they want to understand what they need for the bank if they're new to country, how much cash they're going to need for the mortgage. So we are having those conversations pretty early on. Certainly the people that are serious about getting on the property ladder sooner rather than later, they're getting in touch with us pretty quickly.
Let's go back to me being a tenant.
Yeah.
Okay. So I come to you and I say, right, ready to buy, got my money, saved up. Would you tell me right now, as my broker, to fix my mortgage and for what period, or stay in a variable?
So I would be telling you to take a fixed rate right now.
Okay, why?
Fixed rates at the moment, we're looking at, let's say we go for sort of a middle ground product, 4.4% interest rate.
Mm-hmm.
Right now, most variable interest rates, you're looking at the 3-month EBOR rate plus a margin of, even if we called it 1%. So you're looking at around about 6 to 6.5% for a variable rate right now.
Wow.
So you would need a 1.5% reduction in the EBOR rate before you met the current fixed rates that are available. So a lot of the buyers that we're speaking to, we're saying take the fixed rate, and if within the fixed rate period, those interest rates come down and we feel that you paying, let's say for argument's sake, you have a mortgage higher than $1 million,
mm-hmm.
and you paying that 10,500 dirhams early settlement charge, we work out how quickly you'd earn that back based on those new lower interest rates, and we can refinance you into that new product.
Of course, if there's a low figure to exit your mortgage of 10,000 dirhams, then makes complete sense to do that. That fixed period there, 4.49. How long am I fixed till for in that typical scenario? Is it
typical
2 years,
scenario is 3 years.
Yeah.
Most people look at 3-year fixed rates. That's because that's driven by the banks. There's not many banks that offer 2 years at the moment.
Yeah.
It's just the way the products are.
Yeah.
Or a 5-year.
Okay.
3-year fixed rates, most of them are priced a little bit lower than the 5 years at the moment. So we are leaning into the 3 more than the 5.
Okay.
Just because we are expecting, hopefully, for some interest rate reductions over the coming months, years. So
that these fixed rates at the moment are lower than a variable because the bank expects the interest rates to be probably lower than 4.49 during the 3 years, maybe.
Yeah, there's so much that goes into these banks and the way they work and the way they set their products.
Yeah.
And they are assumptions that we're making,
yes,
but it's a fair assumption.
Yeah.
I think that would hit the nail on the head as far as their attitude towards risk, them making money, whilst obviously also having a varied option of product for the client. Okay. But as far as going back to the question of fixed or variable, fixed, get yourself locked into an interest rate right now that, as I say, you've got that flexibility because the central bank has given us essentially a very fluid option because they're not charging extensive early settlement charges.
Banks don't lend money for free.
Yeah.
We know that in the interest rate. For people on the camera and watching, if I was to pay 10,000 dirhams per month in my mortgage repayment, how much of that am I actually paying off and how much of that is interest, just as a ballpark?
So as a ballpark...
I'm in my first year.
In your first year. So essentially, it will start to even itself out. And it does depend on how long you take that mortgage over for.
Yeah.
The longer you take a mortgage for, the more interest you're going to pay at the outset. So there will be a far bigger difference.
So is it fair to say 50-50 on what you pay? To half it would go to interest, half would be paid off on the mortgage? Is that roughly give or take?
No, I
to
think
begin with?
you're probably looking, if it's a 25-year term, you're looking at probably more than 50%
really?
would go to the interest. Not a lot more, but I would say it's not quite 50-50 at the outset.
Yeah. And then that reduces down as the years go on.
So one thing we say to so many people, because people can get wrapped up so quickly in just wanting the longest term so they can go to Feb 30 on a Saturday and they can get a table that's however much money. So, lifestyle is a big thing here.
Yeah.
But if we can actually sit down, assess your monthly income, look at what you actually use and reduce that mortgage term down from 25 years. So it still fits with affordability of the bank.
Yeah.
It meets what the client would prefer to pay per month. If we can bring that term down, that differential is different. And it's
You'll
less.
be paying off more sooner.
More sooner.
Yeah.
So in the UK, you can get 40-year mortgage terms.
Yeah. Wild.
Yeah.
What can you get here as a term? Is it still capped at 65?
20? So it's capped at the age of 65.
Yeah.
Some banks can go to the age of 70 now.
Yeah.
There's a few things you'd have to do to get to that point, but the maximum term, regardless of that, is 25 years.
Okay.
Yeah.
So I'm 40 soon. So at 45 or 40, I could still get a 25% more, or even 45s to get a mortgage till I'm 70, maybe, if I hit certain criteria.
Yes, exactly.
Why would I not go to my regular banking, who I bank with, and say, hi, I want a mortgage? What would be, because most people's perception is, well, I bank with them for 10 years, 15 years. They're going to look after me. Why would I go and speak to a broker if I can just speak to my banker and say, can you help me out?
Yeah, so this is a question we get asked all the time. So the key difference between us and a bank is that we have access to multiple banks. So if we look to go just to one of the banks as a client and say, I want a mortgage, what's your interest rate? They will tell you what their interest rate is. Mm-hmm. If you come to me and you ask me what's the current best interest rate in the market, I can look across the market and say, this is current best interest rate on that market. Let's say we apply for that interest rate as of today. A week later, suddenly a competing bank reduces their interest rate. I'm in the know, we're one step ahead. I inform you as the client. We can then move you into that bank and get you a pre-approval and final offer letter with that option. If you go to the bank directly, they're never going to tell you what the other bank.
They're only going to sell their own products, right? They're not going to give you your options. I think the impact of speaking to everyone is you could potentially save them monthly payments, but also potentially allow them to be able to borrow a little bit more, which is quite crucial.
And also, people are time poor.
Yeah,
people don't like to spend time filling out application forms, trying to get hold of the banks, pushing. Because one thing you are going to get as a buyer is you're going to get pressure, whether that's from the seller, whether that's from the agent because they're getting it from the seller. We take all of that onus off of the client. So we complete the application forms, we get them into the bank. The agents will come to us. We will be chasing the bank ourselves. So as far as the client as well, it's time poor clients no longer have to deal with paperwork, chasing banks.
Do you know what I found also? And again, this is a bit of a tip and maybe inside information for people that are thinking about taking mortgages. You perhaps may not have even thought about the existing bank's workload also. So every bank will have different levels of workload. You enter into a sales contract with a buyer or a seller. You're bound to complete a transaction within a time frame. Let's call it 3 months. Depending on a particular bank, they could have a huge backlog, which actually affects them being able to move things at the speed that you want them to move at. That's also something that you're privy to in terms of banks' workload and their ability to process within time, and also that will factor in your decision making in terms of giving people the right options, not just rates and different costs up front, but basically how quickly this transaction can move. Right?
That's exactly it. There's so much more to a client's needs and preferences than just interest rate, and that's something I speak to every client about. Is if you just want to go and get the cheapest interest rate, that's fine, but there's so much more that comes with that. You've got insurance costs, you've got banks processing fees. We mentioned, there's processing fees from the banks, there's survey fees, and sometimes a slightly higher interest rate has a far lower insurance cost, lower on fees. Actually, if you look at the true cost basis of that product, it's better for you than the lowest interest rate. And there's, like you say, with the time management, and if you sign into an 8-week contract, you don't want to be waiting 5.5 weeks for pre-approval to come through.
I think the difference is most people will buy a home, let's call it every 10 years. You're probably processing yourself 5 to 10, 15 mortgages per week.
Yeah.
So you have good practice in doing this. So,
the thing is, it's so difficult because as clients, no disrespect to the clients, when you go into the bank and you say, I've been a premier customer of yours for 10 years, so I know you're going to look after me, they are far more likely to look after me and my team who submit tens of millions of dirhams of business to them per quarter.
Yeah.
As far as the relationship's concerned, we have that relationship with the bank because, as you rightly said, you're one client with one mortgage going into the bank, and you're just as important as every other client. However, we've got multiple clients and they fight for our business month on month. Yeah. These banks will hound us for business. So if they're not on the ball and if they're not looking after our clients how we expect them to be looked after, they can very soon lose business, because if we're not getting the service and we're getting complaints from clients because they're not, adhering to what they're promising, that it goes downhill very quickly. So,
got some mortgage myths, some questions to ask you before we wrap up. So, is it more viable to get a mortgage for suburban communities to rent or in hotspots such as Palm or downtown? So I think the question I'm asking there is it better to get a mortgage further out?
Yep.
So like communities further out, or rent in hotspots such as the Palm and downtown? So I know what you're going to say.
So Stuart would kill me if I said anything else. So look, I think it is subject to negotiation and discussion, but ultimately buying your own property, as we went back to earlier, and paying off something that you are eventually going to own is far more beneficial than paying off somebody else's debt. Yeah. However, I get it. You know, there's the hotspots of downtown, and living on the Palm is incredible. And look, when you first get into Dubai, you may not have an option, and you may be a young couple looking to enjoy that Dubai lifestyle. I understand that, and might not be ready to buy. However, yes, I would say it's far more beneficial to lower the expectations of that Dubai lifestyle of being on the Palm, to have a lovely community that might be 15, 20 minutes from there, but you actually have the keys, the title deeds in your name, and you're eventually going to own that cash.
My stock answer is buy. Don't rent. If you can afford to buy. You're creating wealth for yourself, you're creating wealth for your future generations, and ultimately, you don't want to pay someone else's mortgage off, do you? So
exactly,
buy.
Yeah.
Do I need to large savings to get a mortgage? I think we've covered that. We're talking 26% approximately of the value of the property purchase that they're going to enter into. It's very wise to have conversations with you very, very early on to help steer you as a client of what price band you can buy at. I found in my previous experience that buyers assume they can borrow X. I don't know if you found the same.
Yeah, absolutely. If you Google what could I borrow on a mortgage, it will be wrong.
Okay.
Yeah.
Okay. So don't trust Google or AI and Google. Trust our mortgage guys, and specifically Connor. Yeah. Okay. Does lower interest rates mean a cheaper mortgage? I think we can answer that. Rates means you're paying less per month.
Yeah, absolutely.
Which is good, which is what we all want.
Exactly.
Has the recent floods in Dubai reduced the demand from first-time buyers in the areas most affected?
So that's a really good question, and something that I would say no.
Okay.
We've seen the bounce back from what had happened and the way that the government dealt with it and the authorities dealt with the floods, and even down to the developers. You'll know from maybe yourself personally and people within the business that we've had developers offer to fix any work that needs doing after the floods to get the property back to the state that they bought it in, free of charge. Yeah. If that's not putting the Dubai market and the developers in a good light, I don't know what is. Yeah. The fact that they care about the people that are living in their communities. So I actually think that whilst yes, what happened was awful and there was lots of damage and there was areas that were hit worse than others, I don't see first-time buyers or people being put off to buy in certain communities because of it.
I actually think it's made developers of master communities even more aware that they have to be more prepared and they have to react quicker. Actually, so there's probably been some good out of some bad, if that makes sense.
Absolutely.
Okay. If I buy a house on a mortgage, can I resell it immediately and get more money?
Yes. So you can clear a mortgage.
So the only expense you'd have if you're buying, so let's say you buy a property today for $1 million, you mortgage it for 200,000 deposit, 800,000 is a mortgage. You end up selling it for 1.2 million. Your only exposure to the bank is the 10,000 dirhams.
Yeah, well, if it's 800,000, it'd be 1% because that's less than the million. So it'd be 1% plus VAT owed to the bank as no assessment fee, plus the discharge fee of around 1,800.
The rest is all yours, all that profit, all that profit.
All that profit, yeah.
Okay, good question here. So does my credit score have to be perfect to get a credit mortgage approval? Because credit scores reasonably new thing in the last 3, 4, 5 years. Is it AECB, is it?
AECB, yeah.
Yeah. Obviously, UK credit scores have been around for donkey's years.
Yes.
It's quite a new thing here. So just two things. Do you need a perfect credit score? And what sort of things are on your credit score? Because not many people may know this, by the way. It's really important you know.
So, no, you don't need a perfect credit score. When it comes to, because it is quite new, we're obviously in a sort of state of limbo as far as from the bank side of things, they're adding a lot of rationale to things and they're taking a common sense approach to things. If you've got new to country, lack of credit, your score isn't going to be perfect because you haven't got.
So they give you stars, right? They give you 5 stars or essentially 0.
Exactly. Yeah. So at that point, in all honesty, you're more likely to get funding than someone that's been here for 10 years with a higher credit score. But the reason it's not perfect is because they've got mispayments on finance or lines of credit. So the big thing I think is it's not so much a score, it's what's on there. If you've got a low credit score because you're new to country or you haven't taken up much credit, banks can look at that. They can see that there's some risk attached to it because there's no sort of track record. But ultimately, there's no proof of them having any problems with paying any finance either.
So what's on a credit report? Because bounce checks?
Yes, bounce checks.
Bounce checks are on there. Your actual loan repayments. Is there anything else in there which people might need to be aware of to think, okay, I need to stay on top of this?
Yes. So one of the things that people forget is that even if you inquire about a credit card or a line of finance, it will show at the bottom your history. And essentially what it looks like is that you're currently applying for 7 credit cards, whilst trying to get your mortgage finance,
which makes them think you need money, or you're basically a risk to the bank.
I mean, in some sense, but at the same time, I think a lot of it actually just boils down to, well, if you get 7 credit cards a month after you take this mortgage, you max those out, can you afford this mortgage still? Yeah. So what they can actually do is they'll look at that, because out here, what a lot of people don't know is that the banks don't look at your credit utilization on a credit card. They look at the limit.
Okay.
So you might have a credit card with 20,000 dirhams on it that you've never used, but the bank will take up to 5% of that and assume that as a monthly payment on that credit. So if they've got 7 credit cards applications, they could look at that and think, right, if they take out any more credit, this mortgage is not affordable.
5% times 7. Yeah, exactly. All of a sudden it's a game changer for their eligibility.
So you just need to keep on top of that, because what they'll ask for is you to go to the bank and confirm that that wasn't taken up.
So wise not to have a crazy limit on your credit card, or more importantly, maybe not have more than 1 or 2 credit cards, because it could affect lending.
Yeah, I think just be sensible. I think out here, the banks are quite reasonable with credit limits, and they put them up a lot and they offer you lots of options. So I think it's just keeping an eye on that, not always taking the limits that they offer, and just prepared that it may be that we need to reduce that limit when you are applying for your mortgage.
Last question. This is one for me. So taking a mortgage, I've heard this many, many times, which is bizarre, by the way. Taking a mortgage and going through the process, maybe linked to the last question, I am applying for a car loan or a credit card or some other form of personal loan during the mortgage application. Will it affect lending?
Yes.
Okay. So we're saying, whatever you do not enter any form of conversations with credit whilst you're going through the mortgage process, and have that sorted and transferred, right?
Yeah. And just make sure, if there is anything like that going on, just talk to your mortgage advisor.
Yeah.
We're human.
Yeah.
And we'll advise you on that, because it may be that if you're looking to get a car loan, we can factor in what that's going to be.
Yeah.
And okay, look, this is still affordable. Don't take it up yet, but at least we can factor that in, and we know that it's still not going to be a problem for you in the long run with the bank. But yeah, certainly if you're looking to obtain mortgage finance, keep that to a minimum, and try not to apply for anything in conjunction with that application.
Are you finding anyone getting turned down for mortgages kind of in general as not meeting criteria?
I'm touching wood right now because I've got quite a few applications going on at the moment, Carl. Yeah. No. If you speak to a qualified advisor, which everybody here at Allsopp is, in the mortgage section, speak to an advisor that's fully qualified, knows what they're doing, and understands the market. When they have this first 15-20 chat with you, that is as good as accurate as you're going to get from anybody. We then get the documents, we'll run it, make sure that what you've told us as a client is exactly as you've mentioned and is on your documents. That should not have any problems when it goes into the bank. Yeah. It's fully packaged. We add notes to everything so they know exactly what's going on. We assess it as if we're the bank initially. So we always look at documents and try and get one step ahead of the curve with the bank. So once that actually goes in for pre-approval, you shouldn't have any pushback.
So what we're saying here, Allsopp and Allsopp, we will ensure before anything goes into the bank, everything's packaged correctly. So really we're pre-qualifying the situation. So anything does go in the bank, gives you the highest possible chance for you getting your approval and eventually buying your dream home.
Exactly.
Connor, top man. Thank you so much, mate.
Mate.
Taking care of business. This is the Mortgage One. Make sure you listen out. Make sure you follow Connor on any of his social channels. I'm sure you've got social channels, The Mortgage Guy and other bits and pieces. He is available for mortgage chats. Honestly, for 10, 15 minutes of your time, it could make a difference for you saving money, being able to afford a bigger house or a house in your area, or potentially another investment. So make sure you speak to him and the team at Allsopp and Allsopp Mortgage Services. This is Taking Care of Business. Peace.